Welcome to Easy Driver, the most reliable source of automotive information on YouTube. Please like, share, comment and subscribe. How to start investing in electric vehicles, opportunities, key players, and risks. Electric vehicles aren't just changing the way we drive, they're shifting how we think about investing. With governments pushing for cleaner energy and automakers committing billions to EV innovation, the market is booming. Over the past decade, EV sales have surged, signaling a shift away from traditional gas-powered vehicles. For investors, this represents more than just a passing trend. It's an opportunity to be part of a transformative industry shaping the future of transportation. Whether you're eyeing established automakers, battery innovators, or EV charging networks, now's the time to understand the potential and the risks of EV investing. The rise of electric vehicles. Electric vehicles, EVs, are no longer a futuristic concept. They're here and making waves across the transportation industry. Spurred on by innovation, policy changes, and growing environmental awareness, EVs are redefining how we think about mobility. The shift is pulling everyone, governments, businesses, and individuals, into a shared mission of sustainability and progress. Global push towards sustainability. Governments around the world are stepping up to accelerate the adoption of EVs. Why? It's all tied to meeting ambitious climate targets and reducing reliance on fossil fuels. Policies, incentives, and funding are becoming tools to make EVs more accessible. Zero-emission goals. Countries like the US, China, and those across the EU have pledged to reduce carbon emissions dramatically. Some nations are even setting deadlines to phase out the sale of new gas-powered cars entirely, 2035 being a common target year. Incentives for buyers. From tax credits to rebates, these financial perks are pushing consumers toward EVs. For example, in the US, buyers can claim up to $7,500 in federal tax credits, depending on the model and vehicle eligibility. Infrastructure investment. Governments are pouring billions into building charging stations, ensuring EV owners won't have to worry about running out of juice mid-road trip. For example, the Biden administration has committed to deploying 500,000 charging stations nationwide by 2030. All of this sends a clear message. The push for sustainability is not optional, it's a priority. And EVs are at the center of it all. Advancements in EV technology. Technology is the backbone of the electric vehicle revolution. Without it, the dream of mass EV adoption wouldn't come close to reality. In recent years, advancements have tackled some of the biggest barriers to EV growth. Battery breakthroughs. One of the most significant improvements has been in battery technology. Lithium-ion batteries have become cheaper while increasing in efficiency, giving cars longer ranges on a single charge. Emerging solid-state batteries promise even better performance with faster charging and higher energy density. Charging infrastructure. Charging is no longer a hassle. Ultra-fast chargers can charge a vehicle in 20-30 minutes, and companies like Tesla, ChargePoint, and Electrify America are creating networks to eliminate range anxiety. Performance parity, and beyond. Today's electric vehicles aren't just efficient, they're fun to drive. Many EVs now rival or outperform gas-powered cars in terms of acceleration, handling, and ride quality, offering a smooth yet thrilling experience. This progress is making EVs practical and desirable, bridging the gap between early adopters and mainstream buyers. Consumer adoption trends. Why are more people ditching gas for electric? The numbers tell the story. Global EV sales in 2022 surpassed 10 million, up from just 1.2 million in 2017. What's driving this dramatic shift? It's more than just government policy. Environmental awareness. Drivers want to reduce their carbon footprint. With wildfires, rising sea levels, and extreme weather grabbing headlines, the demand for greener options is climbing. Long-term savings. While EVs may seem expensive upfront, they often cost less over time. Lower maintenance costs, no oil changes, and cheaper electricity compared to gas are winning over pragmatic buyers. Better options, better value. Automakers are rolling out models in every segment, sedans, SUVs, trucks, that suit diverse needs. Prices are also falling as competition heats up, which helps drive mass market appeal. Many consumers view owning an EV not just as a purchase but as a statement, a commitment to sustainability and future-forward living. And as infrastructure improves, the barriers keeping people from making the switch are breaking down rapidly. The electric vehicle industry is no longer just part of the conversation, it's shaping it. And with all these changes, it's clear this is only the beginning. Why invest in EVs now? The electric vehicle market is buzzing with opportunity, and all signs point to massive growth ahead. For investors, the question isn't just why EVs, but why EVs right now? Timing matters in any market, and the combination of market momentum, policy support, and changing investor priorities makes this a prime moment to get involved. Let's break it down. Market growth projections. The EV market isn't just growing, it's exploding. Global EV sales are expected to hit 14 million units in 2023, marking a 35% jump from 2022. And that's just the beginning. By 2030, EV market penetration is forecasted to reach over 50% of new car sales globally, according to Bloomberg NEF. That's millions of units sold every year. What's fueling this growth? Demand is skyrocketing due to greater environmental awareness and improved affordability. Simultaneously, automakers are scaling up production to meet this surge. Companies like Tesla, BYD, and legacy players like General Motors and Volkswagen are competing fiercely to lead this transformation. From a dollars and cents perspective, the global EV market is projected to grow from $250 billion in 2023 to over $1 trillion by 2030. Think about that, quadrupling in less than a decade. What does this mean for investors? Getting in today could offer not just growth but exponential returns if you pick the right players in the market. Government support and subsidies. Governments across the world are lighting a fire under the EV market. It's not just about selling cars, it's about achieving big-picture sustainability goals. Policies and incentives are designed to make EVs appealing to both consumers and manufacturers, giving this sector a head start compared to traditional industries. Here's what's happening. Tax incentives for buyers. Governments in major markets like the US, EU, and China are offering rebates and tax credits, often shaving thousands off the sticker price of EVs. Programs like the US federal tax credit, up to $7,500, make EVs more affordable for everyday buyers. Investments in infrastructure. In the US, a $7.5 billion investment plan aims to deploy 500,000 public chargers by 2030. In Europe, similar initiatives are underway to ensure infrastructure keeps pace with demand. Manufacturer subsidies. Automakers are receiving billions in incentives to transition to EV production. Companies that innovate and meet clean energy benchmarks stand to benefit the most, creating a ripple effect across the supply chain, from battery producers to software developers. In short, governments aren't just allowing the EV industry to grow, they're actively fueling it. This kind of support creates a unique advantage for investors looking at early-stage growth sectors. That's it for part 1. We've covered the basics, but there's still a lot more to explore. Stay tuned for part 2, where we'll go deeper into the risks and what to watch out for when investing in EVs. See you there. Please comment, like, share, and subscribe for more automotive information like this. Thank you for watching.